Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski. Today, you could buy the euro if the price reaches 1.1809, with a growth target at 1.1855. At the 1855 level, you could plan to exit the market and also sell the euro in the opposite direction, expecting a move of 30-35 points from the entry. A strong rise in the euro can be expected within the trend after weak US data. Before buying, make sure that the MACD indicator is above the zero mark and just starting to rise from it. You could also plan to buy the pound today in the event of two consecutive price tests of 1.1793. At that time, when the MACD indicator is in an oversold area. This will limit the pair's downward potential and lead to a reversal. Growth toward the opposite levels of 1.1809 and 1855 can be expected. You could plan to sell the euro after the price reaches 1.1793. The target will be 1.1750. where you could intend to exit the market and immediately buy in the opposite direction, expecting at 20-25 points. Strong pressure on the pair is unlikely to return today. Before selling, make sure that the MACD indicator is below the zero line and just beginning to decline from it. You could also plan to sell the euro today in the event of two consecutive price tests, or 1.1809, at a time when the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a reversal downward. A decline toward the opposite levels of 1.1793 and 1750 can be expected. And we're starting with pound sterling dollar pair with Tin Leo. On the hourly chart, the GBPUSD pair on Tuesday first managed to consolidate above 100% corrective level at 1.3470, then also rebounding from above it. Thus, the growth process continued toward the 1.3539 level. A rebound of quotes from the 35.33, 35.39 level would work in favor of the US dollar and lead to some decline toward the 1.3470 level. A consolidation above 35.33, 35.39 zone would increase the likelihood of further growth toward the next Fibonacci level of 127% at 1.3595. The wave situation has once again turned into bullish after the completion of a sideways movement. The last completed downward wave failed to break the previous low, while the new upward wave managed to break the previous high. The news background for the British pound has been weak in recent weeks, but the information background in the United States also leaves much to be desired. For a week, bulls and bears were locked in a tug-of-war and remained in relative balance. But a week before the new year, the bulls launched a new offensive. On the 4-hour chart, the pair managed to consolidate above the 100% corrective level at 34.35. Thus, the growth process may continue toward the next Fibonacci level of 127% at 1.3795. A bearish divergence is forming on the CCI technical indicator, which could trigger a reversal in favor of the US dollar. That's all for today. See you online soon.